All right, time for our Fiscal Focus segment, which is proudly sponsored by InfoChoice, your choice of information on Australian consumer finance. Now, for many of us, investing is one of those things we know we should be doing, but we just don't get around to it. If that's you, you may be interested in a new book called The Quick Start Guide to Investing by Glen James and Nick Bradley. I'm pleased to say we're joined by one half of that duo, Glen James, who's a former financial advisor turned best-selling author and creator of the Money, Money, Money and Retire Right podcasts. G'day, Glen. Welcome to the Savings Tip Jar.
Hey, thanks so much for having me on the show.
Thanks for carving out a bit of your day to join us two relative plebs, Glenn. So, first question I have for you, just a pretty broad one. There's a lot of investment books out there. What inspired you to write yours?
First, it's been a bit of a journey. So I've had my podcast since 2018, and the number one thing that our listeners have wanted to do every year that we've surveyed them was invest in shares. And I wanted to do some books that weren't just about investing first. So the first book, sort your money out and get invested. Then we did Sort Your Career Out, which I made as the prequel, the prequel to the money book, because it's like you get all your money from your career. So why wouldn't you focus on that? Because you're going to use that to make money. Then we had the property book, and then I really then wanted to focus on just investing. So answer to your question, I primarily did it for my audience because my audience want to know what I think when it comes to investing in shares. But also it's really good to go narrow and deep over 60,000 words on one topic. And I even now use this book with my own friends and family. I had a cousin the other day say, "Hey, Glenn, I've heard about this thing at work and it was some trading thing. Should I do it or not?" And I'm like, "No." And I'm like, "I'll tell you what I think." She's like, "Yeah, please do." And I'm like, "Okay, I'm seeing you Saturday night. I'll give you my investing book." So the purpose of the book and why I wrote it was, if you're like my cousin who hears about investing, wants to get invested, this will be a step-by-step what you need to do before you start investing, and then it will lead to how to invest. But also, if you are already investing, this book, it will help you understand maybe some portfolio construction, some more advanced strategies, and just double checking your ownership structure and strategies. So we really wanted to go narrow and deep on investing, and it will help those who are new to investing and also those who have been investing for some time.
Glenn, as I mentioned in the intro, a lot of Aussies do get hung up on investing. And I suppose those that do invest from a young age are quite a lot of the time they're investing for the wrong reasons. You've got these kind of wannabe Wolf of Wall Street bros, crypto bros, trying to invest to get rich. And I liked that bit in the book where you talk about, where you're in a TAFE class for maritime operations of all things. And one of your young classmates Googles your name and then in front of everyone asks if you're rich. To which you reply, you prefer the term wealthy. So just, can you tell me what's the sort of the key difference to you between being rich and being wealthy and why it's important?
Yeah, so I think this whole the word rich has connotations that I don't personally like. And we know that if you've come into some money and you've had a lotto win, you're now rich. And when you're rich, that means we get to spend lots of money on fast cars. We get to spend lots of money on first-class travel. I had a client many years ago who had inherited over $11 million, and they went out and just spent all this crazy stuff. They were acting rich, and that's not what a true wealthy person does with their money. A true wealthy person invests. They're not, crazy and not spending beyond their means. A true wealthy person has the wealth to be generous and ultimately protects their financial future, where we know a lot of people that become rich overnight, within 5 years, I think there's around 70 to 80% of those people lose their money, like lottery winners and overnight kind of celebrities who strike it gold. Because if you get riches fast, you won't keep them. But if you build wealth, you will keep it.
it's kind of funny, Glenn. I'm kind of at this age now where I'm far enough removed from graduating high school that I've now got people who I went to high school with now flogging a pyramid scheme or their course on how to get rich with penny stock. So it is quite funny, the kind of rich versus wealthy dichotomy is rich is
Mm.
easy come, easy go. And I like how in the book you gave a brief breakdown of some of the lottery, some of the people who have won vast millions on Lotto and then blown it all within about 10 years or so. I found that kind of entertaining. And one sort of theme or I guess tone of voice like in your book that struck me is that you're a bit of a contrarian. And you mentioned as such in your podcast episode last week amid all the market volatility, saying, don't panic, don't sell, hold on, you'll be fine,
Mm.
when a lot of others are panicking. So
Mm.
just broadly, what other investing cliches are you a contrarian of?
Well, I think, for example, we get a lot of people that aren't heaps into, like, I'll rephrase it. We hear the news and we only hear the news when bad things happen, right?
Mm.
I saw something over the weekend, like the news headlines, like if the blood's flowing, the news is selling, or you sell papers. So like it's, if you're out there and you're in Facebook groups and you're listening to podcasts because you are wanting to be an investor and all that, that's awesome. But the thing is, if you start just investing because you want to get lots of money so you can be rich and all your problems can go away, the problem is when you hear something on the news that, the stock market fell 3%, if you don't have a strategy, you're just going to be reacting to what the herds are talking about, and you're going to be reacting to fear. And I would say if you've got a superannuation account now and you're under 30, you've got over 30 years for that money to be invested. I saw a thing in our Retire Right Facebook group the other day where someone's like, oh, should we move our super from conservative to growth or growth to conservative right now? Where having a financial advice background, I wrote the book through that lens. And to cut this terrible long story short, if you've got a strategy and you're clear on your strategy, external factors that happen week on week will not impact your strategy, or they should not impact your strategy. Because if I'm investing for the long term, and I think long term is probably over 7 years, and there's a short term blip, I'm not setting my freaking pants on fire and running through the streets selling all my shares because I'm freaked out. No, I've got a bloody strategy to build wealth for the long term.
And one thing I liked as well, Glenn, in the book is, you talk about investing being just part of maybe it's the roof of having a solid financial house in order.
Yeah.
It comes on top of having the fundamentals of an emergency fund saved, a good career, and, the right insurances and things for your needs. So can you elaborate a bit more on that, on just sort of that whole idea of having a solid financial
Mm.
house?
Yeah, so my premise about the sound financial house is when you build a house ordinarily, foundations get built first, and they may run deep. You're not going to see them. They may take some time, but the stronger the foundations are, the better the house will be. And likewise, I believe in our own personal finances, we need our own sound financial house. And foundations, I believe, are having a good budget or cash flow system or spending plan, being out of consumer debt, having an emergency fund, having your income insurances in place, having some estate planning done. Now, those foundations in your own life, they could take a few years to build up. But once you've got those strong foundations, then you can look at lifestyle goals. Then you can look at investing for the future. Because the worst thing that you could do is just start investing with different amounts of money, not have a money management system. Rego or insurance comes through. Crap, I don't have money. Then you put your hands in your investment account, need to withdraw. The market may have fallen 5%, and you've literally just lost money on your investment because you took it out when it may have been a down day or down week or down month in financial markets. But if you had a solid plan in place in terms of your cash flow management system, you wouldn't need to sell down your investments to pay for lifestyle goals, to pay for insurances, to buy that new lounge.
You touched on in your book your ADHD diagnosis, and it does seem to be a growing population in society. People are diagnosed, particularly in like they're not kids, they're adults, and they're being diagnosed. For those sort of people, how do you think that it or your diagnosis helps or hinders your approach to investing?
Well, I think you just have to be self-aware to know that with ADHD, and particularly for me, one of the hallmarks of ADHD is like insufficient impulse control. And sometimes I see shiny lights and want to go full ham into that. Now, that could see an investing opportunity and go, oh my gosh, I've got to put all my money in that and it's going to solve all my problems. But before I had the ADHD diagnosis, I was self-aware enough to know my natural proclivities were that I'm a spender, not a saver. I was a terrible saver, couldn't save money, but I trained myself to be a really good investor. And by having that sound financial house, having good money management systems and guide rails in place, I knew that once money was committed to in my investing account, that it would stay there. But not only in the account, once it's there, it will stay there. That, in the book, we talk about selecting your portfolio. And for me, I use broad-based indexes. I don't do heaps of individual shares or try and time the market, because my natural proclivity will be to try and game the system, it becomes a bit like gambling, like, oh, let me buy this share and trade. It was like, no, I invest for the long term and I park my money for growth for the long term. And that's kind of, you just need to know your natural proclivity. Sometimes if there is a diagnosis of like ADHD, it's going to make things a little bit harder, but it's certainly not impossible. And for me, it's just about having really solid guide rails in my life.
Yeah, good stuff. And Glenn, we know you've got a radio interview in the next couple of minutes, so you're gonna have to jump off soon. But just before you go, if any of our listeners are interested in receiving a copy of your book, where can they go to get it?
Yeah, I think it's almost in every Big W store at the moment. It's in QBD, it's in Dimmicks. Most bookshops will have it. If they don't, they can get it, or you can get it online at investingbook.com.au. But thanks so much for having me on the show, and I appreciate your support, and it's been a good chat.
Yeah, thanks so much for joining us on the Savings Tip Jar, Glenn. We really appreciate your insights.
My pleasure.
Cool.
Thanks, Glenn. Cheers.